Let's get back here to our set where we welcome our guest host this morning, Texas Congressman and Republican presidential candidate Ron Paul. Dr. Paul, thank you for joining us this morning.
Thank you. Very nice to be with you.
Can you give us an update on where the campaign stands right now?
Yeah, we had a pretty good weekend. There were some caucuses meeting and delegate selections, and in Minneapolis, in Minnesota, we got 20 out of 24 of the delegates, and in Missouri, there were 20 out of 40 that we got. In Iowa, there was a meeting that was held to select the steering committee. There are 17 members of the steering committee. We got 15 out of the 17, and we have the chairman of the party in Iowa. And this type of activity is going on around the country, so it doesn't get the attention that we think it deserves. But I think the campaign's going very well. A lot of people like to write us off and say, why are you there? Why are you doing these things? Well, the market tells me that we're doing pretty well because the crowds get bigger, the money keeps coming in, the enthusiasm grows. We can get up to 8,000 people on college campuses. Yesterday, in very, very bad weather in Philadelphia, we had almost 4,500 people show up and stood in the rain for 2-3 hours. So the enthusiasm is there, the money is there. We're making inroads in the structure of the Republican Party. And the one thing everybody's agreeing on is something has to be done in this country. They're very unhappy with the way things are going around the world, in this country, monetarily, financially, debt, this whole problem.
Is that what the campaign is about? Meaning, from a practical perspective, the polls would suggest that the chances of winning are very, very low, if not impossible. Is this not about winning so much as about changing the debate?
Why can't it be both? People want to say, people have a trouble seeing a candidate that really believes in something, and the goal is to move that, and therefore he doesn't want to win, or his goal isn't to win. I mean, this is what I did in the congressional races. I mean, people wrote me off, and I won 12 times. But it was always on the beliefs that I had, and winning the election was the endorsement. So yes, you run to win. If you win, you really get the endorsement. If you do well, you get some endorsement. But there is certainly no doubt, I don't shy away from the fact that it has a lot to do with changing the nature of the debate. I mean, if you don't change the nature of the debate, you can't tinker with the budget. This is why nothing's happening in Washington, because there's no philosophic discussion. Both party leaders endorse the same foreign policy. They endorse the same monetary policy. They really don't care about spending and debt. Republicans say, well, we're going to balance the budget in 30 years. I want to cut $1 trillion and balance it in 3 years. I want to change the monetary system so that politicians can't get away with spending and getting their debt taken care of by the Federal Reserve. So this is a big difference. But this is what the young people know this. They know what's coming on, and they're rallying because they're inheriting this mess. Besides, they've been sucked into the system too. They ended up with tens of thousands of dollars of debt, $1 trillion of student debt, and they can't get jobs. So they know structurally there's something wrong. So it's a philosophic argument more so than a political argument.
So do you still believe you can get enough delegates to win the Republican nomination?
Oh, theoretically, you can. It's not likely, but you can't ever tell. Nobody knew that Santorum was going to drop out last week, but only about a little over half the votes have been counted. When we come up with Texas and California, another third of the votes are yet to be counted. So you don't know. But in theory, you can. In practical counting, I think we're very realistic. But the one thing that is not practical and not realistic for the supporters who have encouraged me to do this would be to say, well, we're in the third lap of a mile race, we're behind. Oh, okay, let's just walk off the field. That's the way they would see that. You don't quit because you happen to be behind. You want to see how you do, and who knows? Maybe somebody will stumble. You can't ever tell.
Santorum dropped out.
In theory, you can win. The likelihood, of course, is obvious.
Well, Santorum dropped out because he did not think he could eventually win. Are you in this to the end, or are you in this until there's not a mathematical chance, or where do you see the end conclusion? Will you take this all the way?
Of course, I decided as we go along, if tomorrow Romney had the absolute number, I would probably continue in a modified way to maximize the number of delegates to go to that convention. They have worked so hard. It's not like 6 months or 2 years. It's been for 4 years they have been working. I mean, there's some states we've had 10 and 20 new state representatives and state senators involved. And for us to say, well, we don't want a presence, we're going to give up, we're going to maximize the delegates. Even a lot of the delegates where the delegates are required to vote for Romney, they're our supporters, but they're going to be there and they'll have an influence. They'll have something to do with the platform. So it's a much bigger thing than anybody realizes. And I think I go by now. Ordinarily, in an ordinary campaign, if you get in and say, well, it looks like Romney's going to win, you don't get any money, you end up with debt, and you don't get any crowds out. I mean, the other candidates, I mean, they're not going to get these thousands and thousands of people coming out on the campus. So the market's telling me that this campaign is very, very viable for two reasons. One, they want to win if we can. They want to maximize the delegates, and they do want to have an impact. I mean, that is very important to every single supporter.
Is Romney a flawed candidate, in your opinion?
Well, I think the system is so flawed, and I think all the other candidates and all the Democrats are, deeply flawed philosophically because they've been taught by the same economists. They've all endorsed a foreign policy which is deeply flawed, and their understanding and need to follow the Constitution is quite different. So I think the Congress, the system is deeply flawed, and they endorse interventionism, Keynesian economics, paper money.
But how about Mitt Romney? How about Mitt Romney?
I think he's part of that whole crowd of politicians, Republicans and Democrats, that are much closer together than most people realize. There's not that much difference when you come to policy. Rhetoric might be different, but just think, we get the Republicans in, and what do? You get double the size of the Department of Education. You get more medical government medicine. So this is why young people are so disgusted.
Well, Romney has actually said that he would cut back on
and they don't get what they're supposed to get. Pardon me?
Romney had said, I think just last week, that he would cut back the Department of Education, not get rid of it, but to cut back on its size.
Yeah, but the Republicans have hinted to that for 30, 40 years, and they've never done a thing. I think the difference is they know I'm serious.
Why don't you run as an independent candidate if the system is that flawed?
Well, I've been a Republican. I won as a Republican for 12 years, and I convinced Republicans and independents. Matter of fact, when I first started running, it wasn't a Republican district, so I had to convince Democrats and independents. By the way, that's where our support is, and that's why we seem to come up short, in the Republican primary, because our support is tremendous. When you put my name up against Obama, I can do better than Romney. But you don't hear that. Nobody talks about that. But it's been on Rasmussen this last weekend. I was 1 point higher, and Romney was essentially tied or 1 point behind.
But you haven't won a state in 3 attempts in running for the presidential nomination. You haven't won a state. Why is that? When you have such a strong support base, why not win any states? Because
sometimes they're independents and sometimes they're Democrats, and they feel pretty uncomfortable going to a Republican primary. But winning a state right now is getting out of the state and dominating that caucus, and that's still up for grabs. Just like I said, Minneapolis, Maine, we still have a chance, and as well as Nevada, Alaska, we had the votes there to dominate, and they just locked the doors. They kept us out, and they're fighting that battle now. They did that 4 years ago in Nevada. And a year or so later, they admitted they did it. And they found the documents that showed that we had the votes to take over the convention, but they didn't want us to. So, yes, we're challenged in the status quo of the entire country as well as the Republican Party. And people don't like to give up their power. But the momentum is very powerful. I'm part of it, but I'm not it. It's much bigger than me, I'll tell you.
It may look better on the earnings front, but the economy remains under lots of pressure. That's why we've seen some of those red arrows this morning. Down the recovery's risks with a Squawk master of the market. Stephen Roach is a senior fellow at Yale University. He's also the former chairman of Morgan Stanley and also held the firm's chief economist post. Good morning to you, sir. You're in New York. You're not up in New Haven today.
Yeah, how about that? Good morning, Andrew.
Good morning. So we've seen some red arrows this morning. The IMF had a meeting over the weekend. There's these jitters in Europe. Where are you right now on the economy?
Well, I think the data flow is mixed. I mean, I think the most disappointing thing in the U.S. is that it looks like a lot of the hiring that we were so enthusiastic about late last year was weather-related. So the jobless claims are now slightly more elevated than we'd like to stay on a brisk hiring curve. And so a little bit of the bloom is off the rose in the U.S. The housing indicators were weak. The underlying retail sales data were weak. Europe is still in recession now for the third quarter in a row. Growth slowing in China. So all this euphoria about a resumption of rapid global growth was probably an overstatement. The markets are reacting to that.
So, Steve, your expectation for the rest of the year, recognize we have Ron Paul here on the set. We're in the middle of this big presidential election. Whatever the economic number is or the unemployment number may be by the end of the year may ultimately decide all this. Where do you expect all this to shake out?
Look, I think in a weak recovery, we're going to have a really hard time getting this unemployment rate down below 8%. I mean, it may tick there, a tiny bit, but you add in the underemployment, and you've still got mid-teens in terms of broad-based measures of labor market distress in the United States, which is really without precedent for a so-called peacetime expansion. So the economy does remain, I think, the central issue for the upcoming campaign, and Representative Paul is focused on that very much so for a number of years.
Stephen, Representative Paul is also focused on the idea of a gold standard. Would you say that's the right way to go for the U.S. economy?
No, and he wants to end the Fed. I don't buy that either. But look, he just made the point in the previous segment that the political debate should be about ideology and philosophy, and that's a fair point. And he's got very extreme views on gold and the Fed that I don't agree with. But I respect his position and his willingness to debate these issues.
Okay, Ron, you have the floor. It's yours if you want it.
Well, the thing of it is, if you're not for a commodity standard, gold, silver, or whatever the market picks, you have to be for a paper standard. And the record for paper is a lot worse than the record for commodities. If you have a gold coin from Roman times, it's still worth something. But paper money essentially always destructs. It self-destructs because it encourages politicians to spend too much and print too much. And that's why we have a debt crisis right now. So to argue against gold means you have to argue for paper. And if you're for paper, it's necessary to have paper to finance government that the people don't support. Otherwise, the people would just pay their taxes and fight these wars and support the entitlement system. But yes, the people want the programs, but they don't want to pay for them. And you have to have paper to do this. But paper will always end badly. And we're in the process of the end of this. The European currency, the only reason the dollar does so well is the European is such a mess over there. And we still have a bit of a reserve status. But I would think that defending paper is much more difficult than defending honest money. And besides, it's still in the Constitution that we didn't repeal that part that said that legal tender ought to be gold and silver.
Steve,
look, I think you're really overstating and exaggerating paper versus something hard. Under Paul Volcker, late 70s, early 80s, we had paper. We just had a disciplined, tough monetary policy that was aimed at squeezing a hyperinflation out of the system. We need a responsible policy. It's not a question of hard or soft, gold or paper. We just need policy, discipline, and an independent Fed, not a Fed that is eliminated, as you have argued in your book.
But the purchasing power of the dollar, since the Fed's been in charge, we've lost 97% of it. The purchasing power of gold for thousands and thousands a year maintains its value. And actually, with increase in productivity, it goes up in value.
Ron Paul, stop right there. Let's get Stephen Roach's response to that.
How do you
is that right that we've lost 97% of the value?
Not even close. I mean, I would challenge the congressman's numbers. How have we lost 97% of the purchasing power of the dollar relative to what? I mean, the American economy has done darn well. We're having problems right now. There's no question about it. We went through a horrific crisis, and part of that, you're correct in pointing out, reflected irresponsible monetary policy in the years leading up to the subprime crisis. But to be on television and tell the American public they've lost 97% of the purchasing power of their currency is, I think, really irresponsible.
Okay, what about, when the Fed took over, the ratio was $20 to an ounce. Today it's $1,650 to an ounce. What percentage is that? That has to be awfully close. And CPI is not quite as much. And you're right, you have to pick what you're comparing it to. But historically, the best measurement of the purchasing power of a currency is gold. Just look at the disaster in the stock market today in valued in gold. If you ever look at that curve, in the last 10, 12 years, the value of the stock market is down a lot worse than the nominal value, let me tell you.
No, you're right. You're right about that. But again, to compare the purchasing power of the dollar for an average American to the price of gold, that a precious metal that he or she doesn't own, except maybe a few of them have it in their mouth, is I just don't think an accurate way to judge the strength of the economy.
Steve, you have to repeal some economic laws that have been around for a good many years.
Steve, we're going to set up a lunch so you guys can continue the debate. Appreciate you being here. Yale University's Steve Roach.
Well, I happen to agree with a lot of his writing. I enjoy reading.
And Ron Paul's going to be here for the remaining
Congressman.
portion of the show. Thanks so much.
Let's continue our discussion with our guest host. We were just talking about the gold standard, and Congressman Paul identified me as one of those paper people, which is not the worst thing somebody has said about me on TV here. Congressman, one of the problems with the gold standard that has been pointed out by economists is the inability of the government to respond with lower interest rates in a recession. And the idea that the government is hamstrung. In fact, it has to raise interest rates to keep the gold in the country. Is that what you want the government doing during a recession, to raise interest rates?
What I want is a market economy. I don't want the dependency. Matter of fact, that's the big disadvantage of paper because of the moral hazard. If we get into trouble, we always know the lender of last resort. It was set up for that reason. 1930, the lender of last resort. Gamble, do anything, take risks, the government's insurance. So they get into that trouble. But if they get into trouble, they shouldn't come and rescue the economy. They shouldn't be bailing out General Motors and these trillions of dollars with both the Fed and the Congress. That was set up. The mortgage, and I complained about that for 10 years. This line of credit of Fannie Mae and Freddie Mac, that is the moral hazard. Paper money is a moral hazard, encourages people to make a lot of risky investment, malinvestments, and they overdo things. They overinvest. A lot of times they talk about the inflation, they talk about the price level, but really the biggest problem with inflating the money supply and giving you artificially low interest rates is the malinvestment. People overinvest in investing in areas that they shouldn't be investing in, so you shouldn't guarantee that they're going to be bailed out.
But it is conventional wisdom that one of the reasons why the recession in 29-30 became a Great Depression was because of the gold standard. And there's research showing that those countries that got off the gold standard the quickest were the quickest to recover.
Well, what you have to do is find out why we had a depression, and it was because we inflated in the 1920s. So the Fed, this is interesting because Bernanke is the expert, and he says the Fed was at fault because they didn't print enough money fast enough, and he always guaranteed he would, and he's lived up to his word. He's gotten his helicopters out there, and he's dumping it out by the trillions of dollars. So I tell you, the big problem was the Fed, but the Fed, according to free market economic and business cycle theory, is that they inflated, which causes the distortion, and the recession is inevitable. You should be talking about 1920, 1921. They did the same thing. They had to inflate once again. We had the Fed. We inflated for the war. Then we had to have the correction. But nobody remembers 1921. 1921 was 1 year severe depression. But they did nothing. They just allowed interest rates to go up, the collapse, GDP went down, and they were back on their feet again. The prolongation was we were propping up the system, not allowing the bad debt to be liquidated. We're doing the same thing again. We're into it 5 years. Japan did the same thing. So we're going to be in this for a long, long time because we're not allowing the liquidation of debt. Mm-hmm. And when you expect the Fed to come in and save them, they're not permitting the liquidation debt. We buy the debt. We transfer the debt from those who had been making a lot of money in the derivatives, and we dump it on the taxpayer. It's a very immoral system.
What would the cost be? Where would unemployment be today if we didn't pursue the bailouts, if the Fed didn't inject the money that it did into the economy, what's your expectation for either unemployment, however you want to look at GDP in the economy right now?
There are other variables. What would you do with the tax code, and what would you do with spending? I want to cut $1 trillion of spending. I want the people to spend the money, not the government. So what you need to do is, what are you going to do with capital gains? What are you going to do with?
No, I appreciate that, but I'm just saying, if you took the bailouts off the table, for example, and you didn't, I mean, people would argue, you've argued that it's effectively steroids, what the Fed has put it. If you took that out of the system, where would we be right now?
Well, the cost would obviously be a lot less. It wouldn't be trillions and trillions of dollars of obligation. It wouldn't be this shrinking of the middle class.
But would unemployment be 8%? Would it be 16%?
You don't know the numbers, but I bet it'd be a lot better than it is now. We would have liquidated the debt. Housing prices, instead of doing this and this and this for 6 years, what you would have had was this, and it'd be people would, $100,000 house is now worth $10,000. Now let's go buy it. People who saved, could start buying their houses again. But the system, once you correct the monetary system, you might be rewarded for savings, and we get back to the market. The allocation of credit now is all done by the Fed.
Even if you're right, the temporary pain has to be enormous, though. You do recognize that?
Well, the long-term pain is 10 times worse than temporary pain. Sure, it could be a year. And like I said,
a year. I mean,
in 2021, it was one bad year and a half maybe.
But that's what it concerns me too. I understand the logic of thinking we have gotten on this system that has steroids. We have gotten carried away with things. The Fed allowed that entire housing bubble to build up, and so it has to come back down. What concerns me is when you start talking about $1 trillion in cuts immediately rather than over the course of a decade or longer, when you start talking about getting rid of, or going back to the gold standard and getting rid of this ability to print money and print your way out of things. I mean, I can't even imagine the unforeseen consequences. We talk about the unforeseen consequences that come with Dodd-Frank or something else along the way. I can't even imagine the unforeseen consequences that would come with that much of a shock to the system, where you're basically ripping off everything that's been created over the last 5-6 decades.
Okay, if it's 1 year or so, that's different. But what your argument would say is, let's do it over 5 or 10 years. Let's have this another worldwide depression is going to be very, very slow. And this is different than even the Depression. This is much bigger and much worse. But there is a good example in the history of big cuts. World War II. We cut the budget by approximately 60%. Taxes were cut 30%. And we had 10 million military personnel come back, and they say, we have to have jobs programs, because there was the New Deal stuff. They didn't even have time to start the jobs program. But by that time, all the bad debt was liquidated. People came back. 10 million people were hired, and we had an economic boom. The Depression finally ended after World War II, about 46, 47.
But tax rates went up significantly. I just looked at a lot of the IRS data for another column that I'd been working on, and taxes went up incredibly in terms of the collection. They brought all new people into I looked back at the tax rates.
Because more people were working.
But not only were more people working, but the rates went on people who were making a lot less money. People who had been making less money were suddenly, they were collecting taxes from all of them going up. There were things like the national victory tax. I looked at the tax rates and I couldn't figure out why they'd gone up so much until I called the IRS.
After World War II?
As World War II started, as they got into it.
Oh, yeah, sure. But afterwards, a lot of that stuff was put aside,
right,
which helped my argument, because they got rid of that and they allowed people to go back to work and pay, and the revenues went up mainly because there were more people working. But it was still flawed because we still had the Fed to deal with, and things came back. But it was so much better than it had been after we got out of the way. Germany's recovery was really when they decided no wage and price controls over there and rejected the American Keynesian advice to put on wage and price controls. And Europe recovered, especially in Germany, by just not following our advice.
Congressman, does the Walmart story relative to what's happening in Mexico and this allegation of bribery, does that fit into your economic framework or anything? What is your reaction to
how did you say that?
The idea that Walmart is alleged to have paid bribes in Mexico and is alleged to have covered it up for many years?
Well, I don't know the details of that, but if people are corrupt and paying bribes, I mean, that doesn't sound like anything anybody can defend. So why would you blame free markets or sound money on
I'm
that?
not blaming free markets. I just wondered if you had a reaction to the story.
Oh no. Actually, I have a lot of respect. I don't know the details of that. I have a lot of respect for Walmart because it's a good business. The only time I get a little hesitant is when they use eminent domain. You know, when they want some special properties and they take private property. I don't like that part of it, and I believe they've used that.
Okay, more to come from our guest host, Ron Paul. Rick Kelly, standing by at the CME in Chicago. Rick, what has them troubled down there in the pits? Let's see if we can solve their problems.
Well, there's no problems in life. There are only issues. You know, when you say that the market is opening down, ignoring deals, I'm not watching the deals as closely as everybody at that desk, but I like the statement to give us an idea about how to look at the market in general. For all we know, the stock market would have been down 3 times or 2 times as much. We just don't know. Yeah. And it's the same as all the discussions you were having earlier. I've been getting boatloads of emails on, you know, whether you saved the country from a depression or not. Maybe that would have been a more palatable way to go. But I will say it's pretty simple this morning. You could look at just exports regarding the U.S. and say the slowdown in Europe isn't going to be that big a deal. But it's so much more. And even if you don't think it is so much more, if you're a market person, the market obviously does. You know, the Dutch government is breaking apart primarily because they can't reach enough austerity to get from about 4.7% debt to GDP down to 3%, the Eurozone benchmark. Just look at our own country with a $1.3 to $1.5 trillion debt and an economy, what, $15.5 trillion? We couldn't come close to making it, which really is why the market's down. Whether it's elections in France, what's going on in the Netherlands or the U.S., one speed, one suit does not fit all, and to think the European Central Bank in the big picture can hold all this together, to me sounds like a cartoon.
Rick, I know there's a monetary world that you and Ron Paul would prefer, but unfortunately there is one that exists right now. I will tell you we have our CNBC Fed survey coming out tomorrow that will try to gauge market expectations, what they expect from the Fed. Tell us, though, how this meeting plays this week in terms of trading, you think?
Listen, the last meeting was a turning point in the marketplace, albeit it was a very short detour. We saw a lot more selling come into the market as there was a notion that the chairman really wasn't going to sign for any extension on, you know, renting the apartment of accommodation. But at this point, it almost doesn't matter. And I think no matter where rates would be without the Fed programs, we know that the pressures from Europe are pushing rates down. And right now, I think that is the overwhelming dynamic.
Congressman Paul, the Fed meets this week. It has Operation Twist, which is ending in June. The market not expecting additional quantitative easing from the Federal Reserve. In your opinion, should the Fed just let these programs end, or would you even counsel rolling them back?
Well, the market will eventually roll them back in real terms, but no, they should be ended. Why continue the process that hasn't achieved a whole lot? I mean, here we are, we're still in a slump. Actually, I think our economy has been slumping since the collapse of the NASDAQ bubble. You know, real job growth isn't there, real wealth hasn't been growing. So I think we're continuing that. So this whole idea that you can solve your problem of too much spending and debt and inflating the money supply with more debt and more spending and more inflation of the money supply is preposterous. So I don't see any way that this will solve it. So the sooner they get out of it, the better. And there is a real question on how you do it. I don't call, although I stand for getting rid of the Fed, I don't call for the end of the Fed tomorrow. Matter of fact, if you read that carefully, what I want is just competition. You know, I want people to opt out of the system they can. Today, if you want to use another currency, internationally you use different currencies all the time. Why can't we use it domestically? But there's laws against it. You go to jail if you try to use a silver dollar as currency, and that is the law of the land. So all I want is competition, and I think the people who love paper money and the Fed and buying those bonds and to make no interest, let them buy the bonds. And they're outpriced. But I would say that we should be talking about buying gold bonds once again.
Do
the
you
direction we need to move.
Do you personally own anything but gold? Do you own stocks in the market? What do you do with your money?
Well, mining stocks, and I like gold, but I like real estate. You know, real estate, but long term, no debt, maybe some income from it. That's more like something of real value.
I take it you don't like treasuries?
Pardon me?
You don't like treasuries?
Oh boy, I guess that's where you go. I mean, look at these trillions of dollars that go into treasuries, and of course, but who buys a 30-year bond as an investment? Oh yeah, I want to take care of my kids. I'm going to put it in a bond, and I'm going to have that money.
The world is buying these bonds. In fact, it sounds to me like the world has more confidence in the U.S. and its financial position than you do.
They're awash in dollars because we've created so many in the other currency.
But they're buying them. They're making an individual
they don't have any
market choice.
Do you want them to buy euros?
Well, why are they buying the United States?
There's nothing else to buy.
Because relatively, and the world is a relative place, right? It's not an objective place. They're buying the United States.
I would concede there's still an illusion and a trust in the U.S. dollar. It's still a reserve currency. But what happens if they start pricing oil in something than other dollars?
And what are they going to price that in?
Well, somebody might come up with another currency. Other countries are now getting together, 4 or 5 countries. They're talking about using something else. And what if somebody comes up with a gold-backed currency and somebody says, hey, this is a better idea? Once you get more rampant price inflation, people may opt. No, I think the dollar is destined to lose its reserve status, and this will change the whole world.
Over what period of time?
Yeah, when's it happen?
Well, that's one thing you can't predict, but I'll bet you that I don't. It could happen anytime because the foundation is gone for the whole system. Could be 5 years, could be 10 years, but it'll eventually be replaced.
All right. Rick, thank you for joining us this morning, and we have more from our guest host coming up.
You see gas prices all over the place. What's the highest price you've seen on your national tour?
Well, when
campaign?
I leave Texas, all of a sudden I'm impressed because I see number 4 frequently,
right.
And I've been very impressed by that. But I guess things don't go straight up or straight down. My guess is that long term, they're going to continue to go up. I remember the 70s so clearly. A barrel of oil was $5, went up as high as 40, over a 10-year period. It went down, back down to 10. Yeah. And there's all kinds of reasons, embargoes and the various reasons they give you drilling, why prices go up, supply and demand. But what they don't talk about is inevitably the value of the dollar. So if you look at the value of oil and the value of the currency, it does a lot of this, but long term, it reflects the basic value of the dollar. And the value of the dollar is going down, so the price of oil and gasoline, long term, will continue to go up. And if you have a crisis, if we continue to mess up in the Middle East and mess around with Iran, and that breaks out, you could see $200 barrel gasoline, and you're going to see a real chaos in this country. That's the potential.
We have had sitting Fed officials, including Bullard from St. Louis, the Fed president in St. Louis, who have said that they do believe that all of the easy money policies have had some impact on the commodities market. He talked about oil in particular. Right. But I don't think you'd see them say that we shouldn't do the steps that we've taken as a result. It's something I think they believe we need to watch, but they still think that monetary policy and having the Fed riding over that is an important tool.
Well, I can understand it, and you even made the point there about the pain that might go through if you do that. I look at it in medical terms. It's sort of like an addiction. Getting off a drug isn't easy, but if you don't get off the drug, you kill the patient. And our economy does depend on government stimulus and spending and inflation and bailing out and honoring, this moral hazard that we will bail you out, because if you remove it, there is some suffering from that. But long term, it isn't good. And we are addicted to this system. It's not going to be easy. I don't think nothing can be solved until we as a people reassess what the role of government ought to be. If everybody thinks we should be the policemen of the world and have this entitlement system from cradle to grave, run our personal lives and have this monstrous government violating our civil liberties, I'll tell you what, no, this is going to continue. So we have to once again reassert ourselves and decide what type of government do we want? Do we want to have this micromanager?
Another part of your platform is that you think the U.S. should pull back quite substantially on foreign aid.
Oh, no, not just foreign aid, especially the military and everything. I mean, our national debt went up $4 trillion due to the spending overseas in the last 10 years, fighting wars that were undeclared, unwinnable. We don't know why we're there. There's so much chaos. The violence is getting worse in Iraq. They're talking about Kurdistan breaking away. They want to go in. We're into Syria already. They're anxious to go into Iran. All this nation building going on. No, I want to get out of there. There's no benefit whatsoever.
And it's a consistent part of libertarian philosophy that these foreign entanglements create the nexus for the ceding of freedoms back home.
You mean?
In other words, if we're going to have all these expenses overseas, then we have to cede certain financial freedoms at home to pay for it.
Oh, all the time. And look at what has happened to our civil liberties. It's an economic consequence. There's a civil liberty component to it. Oh, yes. And it doesn't help our national defense. The interesting thing is...
It doesn't help our national defense?
One second. The interesting thing is in this current campaign, I get more money than all the other candidates, even way back for the last year, than all the other candidates put together. So my foreign policy is what is attracted to the military.
You said it doesn't help our national defense to be in all these places. Why not?
Because of the blowback phenomenon. You know, we go over. How can it help us building more and more enemies? How can it help us by saying we're occupying your country? And I like to tell people, look at it this way. What if anybody did to us what we do to other countries? And we march in, we put our troops in, we kill a lot of people. We now have declared war on the world with a global war on terrorism, and every spot on the earth is vulnerable to our drone attacks.
But it happened as a result of 2011,
September
11, 2001.
That is an excuse, and it's a misunderstanding. The war in Iraq was planned. The first speech I gave against the war in Iraq was in 1998 because the policy was changed, and I said our policy now is to remove Saddam Hussein. He used to be our friend, but now we're going to get rid of him. No, that was an excuse. Saddam Hussein had nothing to do with 9/11, and Saudi Arabia, which is our best friend, runs the Sharia law, 15 out of the 19. We don't say a word about them.
No question that we were attacked on our soil, though. I mean,
sure,
no question that we were attacked, and how do you respond?
Maybe if you understand Al-Qaeda, yes, they purposely did it, and they explained exactly why. And they said it was because we had troops in Saudi Arabia on their holy land, and we had this embargo and bombing mission for 10 years in Iraq that our people admitted killed 500,000 children. That's what the Muslims know about. So they felt very justified to get our attention. But to say,
what would you say about what Saddam Hussein did to his own people, for example?
Well, what did the Soviets do to their own people, and what did the Chinese do, and what did Pol Pot do? How much did we tolerate there, and how much suffering is going on in Africa?
Big jump from that to whether or not that's a reason for a U.S. invasion.
No, look, you know where I stand on the larger picture. I'm probably closer to him, but there are issues.
I agree
that you could fight back on. So.
He sure makes you think, that Congressman.
Back, our guest host this morning has been Ron Paul, and before you go, I got two questions for you. One actually came in from who asks, should workers at every level be able to save their wage in currency, in the U.S. currency, meaning not invest in the market, and still be able to, quote unquote, store their purchasing power? Do you get the question?
Well, yeah, but they can't do it if you do it in Federal Reserve notes. There's no storage of wealth.
Correct, but in the broad context, in a perfect world, if you got rid of the Fed, would you still be able to do that?
Oh, absolutely, more so. The Fed is a counterfeiter. He counterfeits and destroys the value of money. But if you have real money, you encourage savings, and you can accumulate wealth. And this is where real capital comes from. Capital cannot come out of a printing press or out of a computer. Capital has to come what is left over after you earn something, and you use what you need and what you save. That's the only true measurement of capital. The only reason that the Federal Reserve, what they do, acts as capital because it dilutes the real value of your money, and that causes the gross distortions and hurts so many people.
Quick political question. If you do not get the nomination to be Republican president, will you back and support Mitt Romney?
I haven't thought that through and I haven't made a decision, and it depends a lot on whether he agrees with me on my foreign policy and on the Fed.
And if not, you wouldn't support him?
I would think about it. I get along real well with him, but better than the rest. But we don't have much in common on politics. I mean, he's not very.
Did you end up supporting Bush?
Pardon me?
Did you end up supporting Bush when you ran?
I don't know whether I did not support McCain. I didn't make an announcement on the others, but I wasn't very happy with
Real quick, before you go, there is a video game in the works, the Ron Paul video game. You know about this?
I've heard about it, but you know all about the law and finance and all. If they do that, do I get a cut on that stuff?
I think you should.
Trying to, if you play the video game, you can try and destroy the Fed along the way.
But who knows if it's a friend? Obviously it must be a friend. Maybe he's doing this. He'll probably send money to the campaign.
Well, you can only hope. It has been great to have you here.
Thank you very much.
Appreciate it very, very much, Ron Paul.